welcome to the Weekly Market Roundup on the Rural Radio Network. I'm your host, Steve White. We're trying to cut through the week's noise, bringing you what the real story is, the market movement for the last 7 days. We've certainly got a lot going on. Talk of a deal with China. Will we finally send some soybeans across the ocean? Plus, we continue to have the government shut down now a month long, no USDA reports. Continued action and interest in what's going on with the cattle markets as well. It seems like every week we've got a lot to unpack lately, and we've got some great guests to help us get that done this week. Jeff Peterson of Heartland Farm Partners and Austin Schroeder of Brugler Marketing. And just so much to get to, as we mentioned, every which way. But Jeff, let's start with you. When we talk about soybeans going to China, we have not had that happen. What are you kind of looking to see potentially that could be happening? But there's still a lot of unknowns here, aren't there?
There really is a lot of unknowns, but it's great that we've, got, call it what you want, a trade truce, trade agreement. We know nothing's officially signed. The hope would be is that there'd be get something signed, next week or so is what we've heard. But as you dig into it, some of the things that we're looking at is that on that 12 million metric tons that's been talked about, it got expressed as this season. It got expressed as in, through January. And what it seems like is that it's either going to be purchased or it's going to be physically shipped. We don't know that yet. But just to kind of put that in perspective, it's just a little bit over 441 million bushels. And to keep in mind, so far, this crop year started back in September 1st, we have had 0 shipments. And normally by this time, we'd have about 208 million bushels, if you look back to last year, is what would have been shipped out, through the fall. So we've missed on that. And so it's great that we've got some talk of those shipments. So we're looking forward to kind of see how that comes together. And we're coming forward to see, how much detail there is. But the big thing we really want to watch here, since we don't have the ability to see the export sales reports, that normally come out on Thursdays, we're going to be watching those export inspections very close. We're going to be watching the spreads very close. We're going to be watching, the basis levels, what we're seeing for the basis levels, whether it be at the export side at the PNW, at the export side at the Gulf. We'll also watch the interior levels, all for hints on what type of activity there is on actual purchases by China.
And Austin, I want to ask from your perspective, what are you kind of watching in terms of China and what could be coming? But when we start to see some details, what is it you kind of want to know?
Yeah, and I want to hit on the basis levels and stuff like that. You've kind of already seen some of that up in the northern plains, North Dakota, South Dakota. If you look at their state level basis, you've seen that rally or firm up, I guess you should say, anywhere from 20 to 30 cents here over the last couple of days. So you have seen some of that improve. I think there's been some buying, there's been some rumored buying, and I think that's going to likely continue. We know that China's kind of got a rough area of around mid to late December through till the Brazilian crop comes online sometime in late January to first of February to when they need that crop. And so you're probably going to start see some of that 12 million tons either sold or shipped in that period of time. But I think some other things outside of soybeans that you may want to watch for is just kind of what they do with other crops, what they do with maybe beef. You saw a lot of their export business of beef, our export business of beef drop off pretty hard in that time period when we started putting tariffs on. And then also, I kind of want to watch corn and wheat. I don't think we're going to really ship much to them or sell much to them. But I think those are some you kind of want to watch here in terms of, if they come in and buy a little bit here and there.
Absolutely. Jeff, I want to follow up with what Austin was just talking about there in terms of basis. Where do you see basis levels going specifically on soybeans here?
Yeah, so as you dig in and look at it, and Austin's exactly right. We've seen some nice improvement already. As we look back to say like last week, the improvement was mainly coming from the improvement at your soybean crush facilities. And as a general rule, what we've seen is anybody who had probably a higher delayed pricing charge or didn't, they probably didn't get the amount of bushels that they wanted. And so as a result of what there was is that they were having to scramble to get coverage because the farmer wasn't letting much go. What we know as we come into this week, that's changed a little bit. We've seen a little bit of weakening at some of the crush facilities, but then we've seen a little bit of improving now happening at ultimately some of the rail facilities. But I still think from the crush side, they're going to have to continue to push hard to get bushels. Basis is going to need to improve at the crush facilities. And also we're going to have to see that improve also at our rail facilities if we have any chance at all of being able to source the bushels and ship those, over 400 million bushels that's being talked about from this trade agreement.
And Jeff, I want to keep it with you for just a moment. So the numbers that we've heard talked about, and again, we don't know if this is, we don't know all the particulars yet, but where does this compare to historically, at least in recent years, what we have actually sent to China? I mean, there's a lot of excitement right now, but help us put it in context.
Well, that's a good point, and it's all a matter of kind of how you lay out those time frames. So if you take a look and you say like on those 440 million bushels, and you look at going back to the start of the crop year, which was back in September 1st, if that's all we end up sending to them from September 1st, say through the end of, let's just get us out to August here, we'd have to go back to basically the 2018 crop year, which was 493 million bushels. And then the 2018 crop year was 493, 2019 crop year was 593. But then as we start talking about that 25 million metric tons, that's the additional promise that was laid out there. So far, the discussion on that has been, it hasn't been laid out whether that's per crop year or, per annual year or calendar year. But even if we keep it on just the calendar year basis, so you're talking on 25 million tons, that's about 919 million bushels. And what that would end up comparing to is this last year, crop year wise, 2024 was 832 million, 2023 was 917 million, 2022 was 1.148 billion. So the nice part about that is we know we've been trending down. The reason we've been trending down on exports to China is the fact that Brazil continues to produce more. So this 25 million metric tons that's being talked about over the next 3 crop years, would help kind of prop that up and help assure us. Now, the only thing we don't know is that within this agreement, until we see the numbers, if it's anything like the the agreement that we signed back in 2020, what the China ended up having in there is a lot of those purchases would be based off of market-driven conditions. So we don't know whether that language is going to be in here also. So does that mean we're going to have to be competitive in order for us to be able to get that business? And that's still unclear. So I'm looking forward to seeing that information as we get that.
And Austin, sending it back to you, but in all of our commodities, it still remains such a global marketplace. What do you make of some of the other trade talks that we were hearing rumblings of a lot of other deals, a lot of other places? Is that in whole, if that all adds up, do you see some potential there to maybe kind of diversify our portfolio as a country, or what do you think of all that?
Yeah, well, you've seen some of that mentioned here. I think Japan was one. They increased purchases of soybeans. Now, how much is that going to be? Because they only import about 3 million tons, and 70% of that already comes from the U.S. So, I think some of that is limited. And even going back to that Japan trade deal, I think the number on it was $8 billion, and we ship anywhere from 12 to 14 to them on any given year. So, that trade deal wasn't necessarily, I guess, I would call it necessarily a win in terms of actually increasing our sales. I think it was just kind of gives us a baseline to kind of go off of. But I mean, opening up any other market, especially, trying to become a little bit less reliant on China, especially in the case of soybeans where we ship so much of it to them, kind of helps us. But I think, definitely we need to, look at expanding some of our markets.
And Jeff, what do you see in terms of just our ability to hit kind of the export numbers that maybe have been projected this year?
Well, there's a lot of questions about that. And as we've dug into that, we've been watching those, export inspections very, very closely. So far, if we look at it year to date, normally, as I mentioned before, China would have taken, over 200 million bushels from us by now. The positive note of that, and they haven't, they had taken 0. The positive note is that all the other countries beside China on the shipments since September 1st till now, they're actually up about 80 million bushels, and that would be up about 49% compared to a year ago. And if you go back and look over time, the key to whether or not before we had this deal we were going to be able to hit the numbers or not was going to be how much we've been able to send to those other countries. And the number that I always come back to is that if for some reason China was going to have to source most all their bushels from those other countries, well, there was about 900 million bushels that basically Brazil shipped out that didn't go to China. So our hope was going to be is that that was going to bring that demand over to us, and we'd pick up some of that, and we would have been able to get to maybe 1.5, 1.55 billion bushels of exports. USDA from their September report, their number was 1.685 billion bushels. Now, what I believe is because of this deal with China, and it looks like what we've been able to ship, I do think we'll be able to hit our number, the 1.685 billion. The importance of being able to hit that number then comes back to that ending stock side. On the ending stocks, if we can hit that number, and if we don't see a change on the yield and keep that at 53.5, then we're sitting there at about 300 million bushels of ending stocks. And now keep in mind that takes us clear out to August 31st of 2026. But with that particular type number, then that says, what, prices where we're at right now are probably pretty well supported.
Yeah. We are at the point of the show where we got to start wrapping things up. That all our time always goes quickly. Austin, I'm going to come back to you for the next word here, but just in general, as we're trying to break through and understand everything that's going on, there's so much unknown and so much uncertainty, so much volatility. We haven't even really talked a whole lot on this episode about the cattle side of things. We continue to see New World screwworm, and I was just with the Ag Secretary Brooke Rollins this week, and she talked about this beef coming in from Argentina, and basically said, "Oh, you guys, you're overblowing this. We're just trying to bring in some cheap ground beef to help out consumer prices and the continued issues we see on the crop side." Austin, and just as we think about all of the volatility and all the challenges right now, what's kind of your takeaways for a producer who's just trying to manage all the risk these days?
Yeah, well, managing the risk is the tricky part. You got to have some sort of plan in place. I mean, obviously, we've had a decent rally here over on the grain side, especially on the soybeans. Corn's kind of been drug along as well. And so I think, we definitely have to, look at taking advantage of some of those rallies. I know that they may not be, close to your, cost of production in some cases, depending on what that level is. But, taking advantage of that, whether it be, looking at buying some cheaper puts or looking at making some sales or something like that. And then obviously on the cattle side of things, there's just been a lot of liquidation within that market. It's been pretty hairy just trying to, get in or get out, whether it's, limit down or whatever the move is on that specific day. But there's just been a lot of liquidation within that market here.
And Jeff, same question to you, just managing risk in these volatile times.
Yeah, the biggest thing that I'd say right now is that take advantage of this run in soybeans, be able to go ahead and get some sales made. I do think we'll see an improvement in basis. I do think we'll see spreads will, start narrowing up. There'll be less carry in the market on both the corn and the soybean side. So, don't be afraid to make some sales here. If you're trying to protect some stuff in the bands, I'd still would use hedge derived contracts so you can take advantage of a little improvement on the basis, but get your, price, move your protection out to whether it be January or you get it on out to March or to May, depending on what your delivery period is. And then over on the corn side, I think we're going to see a little bit of weaker basis yet as we finish up harvest. But then as soon as those bin doors close, we will see an improvement in basis. So don't be afraid to also make some sales there. And also don't forget on the new crop side, we're getting into some levels on the soybeans, and also we're on the corn side. It's okay to start making some new crop sales for that next year's crop.
Well, very good. Some great feedback as always. Thanks so much to our guests joining us this week, Austin Schroeder of Brugler Marketing, as well as Jeff Peterson of Heartland Farm Partners. As a reminder, commodities futures involve substantial risk of loss, not suitable for all investors. That is the Weekly Market Roundup. I'm Steve White on the Rural Radio Network.